Taiwan also surging 1.7%.
Rally seems key to the economic data and signs of slowing inflation and the economy.
अभी हमारी जो सबसे पहली प्रायोरिटी है, प्राथमिकता है कि सभी लोगों को सुरक्षित स्थानों पर किया जाए और जान माल की सुरक्षा की जाए.
I think the market has tried to predict pivots multiple times last year, and every single time they've been incorrect.
It's the National Statistical Organization, quite distinct from the government, saying that the GDP will grow at 7%.
Telecom industry's revenues will grow in 2023.
The start is well in the green, almost 100 points higher now on the Nifty.
Paytm is surging on back of their Q3 business update. Their value of loans disbursed is up 36% sequentially at 9,958 crores.
90,000 is the segment size, and the penetration in C is like less than 1% right now for EVs.
It's a healthy mix, both domestic and foreign.
Bombay High Court has directed the interim release of both Chanda Kochhar and Deepak Kochhar on a cash bail of rupees 1 lakh each.
The Nifty, as we speak, has scaled at 18,100 mark, 250 points on the Nifty.
Premium in the month of December has grown by about 15%, which is a good number on a year-on-year basis.
Right now, we are sitting with gains of 194 points. Well, that was the day so far. Hello and welcome to Closing Bell. We are live from the CNBC-TV18 Motilal Oswal studio right here in Mumbai. I'm Sonia Shenoy, and with me are Rima Tendulkar here in the studio and Nigel D'Souza joining in from the newsroom. Well, things have looked good. We've begun the week on a positive note. The Nifty is holding well above 18,000. We haven't really built on to our gains through the course of the day, but what we've done is managed to hold on to the 18,000 mark and hold on to the 100-day moving average. It's led largely by the same set of stocks that we started the day with, whether it's IT stocks ahead of earnings, whether it's M&M on the back of positive commentary from the management, as well as Bharti Airtel on the CLSA upgrade. A lot of contributors to make sure that the index stays above that 18,000 mark. The other big takeaway is that the contribution really is secular in nature. It's not so much from the Bank Nifty. In fact, the Bank Nifty is holding up with gains of around 260 points, but there are several other contributors as well, including names like Reliance, L&T, as well as TCS. So it seems to be, a pullback. Whether it holds on, time will tell, but for now, at least, it's been a stable day. And I guess after all the volatility of last week, some stability is much needed.
Absolutely. So even though we've slipped about 0.5% from the day's high on the Nifty and on the mid-cap index, this still qualifies as a very strong start to the trading week, as the benchmark indices have gained close to a little more than 1%. So 200 points up on the Nifty, while the sensex has gained close to about 725. But as we pointed out, the high on the benchmark indices was hit about 2 hours ago. So from that level, we have slipped a bit. And a couple of reasons why. One, HDFC Bank has been under pressure. ITC has seen a slip, and Titan Industries is the other one, which has seen a bit of a knock. Titan is now down close to about 2.5%. While in the last 10 minutes or so, we've seen the Nifty and the Sensex stabilize. On the mid-cap end, it's been a steady decline. The mid-cap index is just up close to about 0.6%. So today, the gains have been led by the frontliners. The mid-cap index is underperforming. The advanced decline ratio, which in the morning was perhaps more in favor of the gaining side, 3:1, has now dwindled in favor of 3:2. So now you just have 3 stocks in the green for about 2 in the red. There you have those lines not converging, but the gap between the two definitely narrowing. Hi, Nigel. What are you tracking?
Well, we were bracing for a bit of a pullback from the kind of selling that we saw. And maybe the Fed, in the data points that we got on Friday, well, that provided enough reason to see that. So today we have a bit of a relief rally that's ongoing. But we met some kind of resistance at around 18,140. So that 18,150, that appears to be the near-term hurdle for the markets. Now, the IT stocks, well, they are leading the way. The Nifty Bank for the third consecutive day is out of form. It's underperforming what the index is doing. And that's going to be the big turning point, actually. Whether we can go back to around 18,300 or we make a revisit to around 17,700 odd. The Nifty Bank, for now, it's quite subdued. But let's see whether or not it can make a bit of a move. On the, on the broader markets, well, everyone's celebrating the Nifty is up. But the breadth of the market is quite weak, actually. The mid and the small cap indices, they're up 0.3%, around 0.4%, which is sharply underperforming what the headline index is doing. Is it taking a break? Well, that's something else that we should be tracking as well. On the options data front, the 18,100 call, well, big build-up is what we've seen out there. surge in open interest premium around 70 rupees odd. So there is some writing that we're seeing at that level. And that reaffirms, that earlier comment that I made, that 18,250, which was rejected 3 or 4 times last week, that's going to be a big hurdle. On the downside, though, 18,000 put as well is seeing a good amount of open interest. At the start of today, the premium was around 150 rupees odd. So that reaffirms that 17,800, 17,850, that's the buy zone. One takeaway, though, from the quarter 3 operational updates that we've got is some of these stocks that are trading at elevated valuations, whether it was Bajaj Finance or whether it is Titan, the room for error is very, very limited. Titan in an uptrending market is still down more than 2% odd. So that's giving a sense that these richly valued stocks, they need to justify those valuations. Maybe they'll be winners, in the next few years or so. But in the near term, we could expect some bit of skittishness because of the elevated valuations. You guys.
Okay, thank you very much for that. Let's tell our viewers what we've lined up on Closing Bell today. M&M is one of the big Nifty gainers. Key takeaways from our conversation with the management coming up on the show. Telecom stocks are in focus on the back of a fresh brokerage note, with Bharti Airtel being the top pick from CLSA. Key highlights from the CLSA report on Closing Bell today. And IT bellwether TCS is all set to report Q3 numbers. Key expectations, details coming up. And we'll also discuss the way forward for the markets with Mithun Aswath of Kiva Advisors.
Okay, all right. Well, how do you position yourself, though, in the final hour of trade? Mitesh Thakur is back with us. Hi, Mitesh. A good trading session, one would have to say. We've come off 80 points on the day stop, but those intraday dips are getting bought into, and that's what's happened just around 20 minutes or so ago. Your view on the index and a couple of trading strategies?
So, Nigel, my view has turned, at least in the short term, on the positive side. I think, as you rightly said, the last hour we got a decline to about 17,997. Now, that can work as your trading stop loss about 10 points below that. And therefore, I think, a chance that this bounce back could continue is there. The indicators have started turning northward. I think that, kind of adds to the conviction that a long trade might give you a better movement in the short term. So with that as the stop loss, I think the targets of 18 to 40 to 50 can be kept on the upside. Having said that, on the stock side, Reliance is something, which has clearly broken out. That's a buy. Keep a stop below levels of 25.60 here, and a target of around 26.40 on the upside can happen. And the other one is Ipca Labs, good price and volume action. That's a buy as well, with a stop at about 857. Look for targets of 910 on the upside.
Okay, thanks a lot for that, Mitesh. We'll keep coming back to you for more. M&M is actually the big Nifty gainer right now. And if you've missed out on the trade today, it's just about 4% away from its 52-week high. M&M, in fact, is even trading in line with historic valuations. So it's not like, after the big rally, it's not like the valuations are too expensive. It's currently trading at 17 times FY24 and 16.5 times FY25 price to earnings. This is in line with the historical average of around 16 times. So maybe there's more valuation headroom as well. M&M will be now starting the bookings of the new XUV 400 electric vehicle that happens from the 25th of Jan, and they have huge plans in the EV space. XUV 400 is the first electric vehicle from the Mahindra stable, and they're looking to target the B and C SUV segment, which is a total cumulative 90,000 units per month. These are ICE engine SUVs that are currently sold, the traditional engine SUVs, but they are looking, that eventually these will transition to EVs, and hence they will be the beneficiaries of that. They're also setting up a 10,000 crore EV plant in Pune, and they are looking to become the #1 player in the SUV market. Currently, they have about 20% market share. That's the revenue market share of M&M. In fact, Deepak Shenoy, founder of Capital Mind, joins us now to talk about that. Deepak, good afternoon. Happy New Year to you. Good to see you on the channel. Since we're talking about M&M, I had a chance to test drive the new EV, and it was not disappointing at all. Very good, very good space to get into for M&M, and sort of they have ambitious plans here. But from a stock perspective, do you see more upsides, or are the valuations at peak levels now?
Yeah, thanks, Sonia. Firstly, very happy New Year to all of you and all the viewers at CNBC-TV18 as well. We own M&M, so honestly, I would say the price, in the next 2 or 3 years, I expect it to only go up from where it is. Of course, it may have some choppy volatility, that's fine. But the reason why, one of the reasons I think it's been outperforming other PV players is actually, it's taking PV market share, and the PV game, the place in the PV segment is moving towards the SUV, maybe thanks to some really bad roads, where your sedans don't seem to do so well, but also because the affordability in India seems to have gone up. They've launched the Thar today at, I think, between 10 and 14 lakhs. So a very good price point for what is a kind of a legendary car in a way. And also they have the XUV 400, like you said. I drove the XUV 700, which is, I think, in terms of features and the stuff that they have in the car, it's pretty much top notch in comparison with even some of the German manufacturers. For a price tag of around 30 lakhs at the top end. So I think they've got the price points right on almost all of their SUV products. Even the Scorpio N is selling like hotcakes. The 700 is booked for a year, and I know because I've booked something, and it's still going to take another 6 or 7 months before I can lay my hands on it. But so I think from that perspective, they're doing well. Plus, they have the other businesses as well, as M&M being the holding company of a lot of other companies, including Telecom, including Mahindra Life, including a bunch of other auto OEMs as well. So I think you get this, conglomerate sort of effect here. Plus the leadership in the PV, SUV or SUV cross space. I think good place to be for the next few years, apart from the tractors and stuff.
Deepak, afternoon, Rima here, but do you get a sense that the market share from here on could get a little more fragmented, split between the other players? Right now, M&M has leadership in SUV, but Maruti has grand plans to enter into SUVs aggressively. Come calendar year 2025, the Korean, the German, all of them will enter into the electric vehicle space as well. So right now, Tata Motors is dominating it because it has an early mover advantage. If you want to go out and buy an EV right now in India, it's only largely at Nexon, which is dominating, and that's the only option that you have, which is why they have an 80% market share. But in 1 or 2 years, a lot of the other companies will be entering in. So do you get a sense that the best perhaps is maybe behind M&M and Tata Motors, and market share will get more fragmented?
So I think next 1 or 2 years may be difficult, Rima. Here, the problem really over here is adoption is based on how much India gets capacity, especially in urban, of recharge facilities. Right now, recharging still takes a significant amount of time, and there are not enough places to be able to recharge, especially if the market share of EV grows from here. So I think the adoption is going to be a little bit slower than we think. We are looking at 2027 as a time when the phase shift really happens for EV to take over. The XUV 400 is interesting. Tata Nexon, as you said, it's one of the leaders in the space. There are the higher end German car EVs that are coming in, including from Volvo and Mercedes and so on. That will probably take away some part of the urban market as well. But I think in terms of EV, the penetration will, it'll still be very slow. So while, I think that may be a factor in terms of Tata playing a share, it's in all of these companies, it's a relatively really small portion of their overall revenues for the next 2 or 3 years. After that, things will change. But by that time, we would have a much better electric recharge network, a different set of facilities. And I think two-wheelers will also come in quite strongly in the EV game by that time. That's when I think this phase shift will happen. Right now, I think it's really small and like you said, fragmented, but it's too small to make a major difference right now.
Okay, that's about autos. Wanted to get your thoughts in on telecom. And before that, just for the benefit of our viewers, there was an interesting note which came out from CLSA on the different telecom companies. So Bharti Airtel is CLSA's top pick in the sector. Target price is 1,040. The reasons why CLSA likes Bharti: 1, it's trading at a 10% discount to the 5-year average. 2, they expect Bharti Airtel to lead the tariff increase, and they expect ARPUs of Bharti Airtel to inch up to 236 versus current levels of 190. 5G rollout and early monetization of the high-end 5G subscribers will only add to the upside. And finally, they say Bharti's debt is comfortable. On Vodafone Idea, they have a sell rating. Target price is 6 rupees. They're concerned about the falling market share and lack of clarity on their fundraise and AGR relief. They've also upgraded Tata Communication, which is an enterprise play, B2B. Unlike a Bharti Airtel or a Vodafone Idea, which is B2C, they have upgraded Tata Communication to an outperform target price 1,646 on the back of accelerated double-digit growth. Indus Towers, they have downgraded. Now remember, CLSA has been very bullish on Indus Towers, but that call has not worked for CLSA because Indus Towers has been an underperformer. So they're saying that despite the valuations being very cheap and attractive, the problem is the lack of clarity from Vodafone Idea, its financials, because Indus Towers has a lot of receivables from Vodafone Idea. They've already written off 3,000 crores, but is there more to go? And that's a bit of a concern. On Sterlite Tech as well, there is a downgrade from a buy to an outperform, target price 200. And here they're worried about the rising debt levels of Sterlite Tech. Deepak, thoughts on any of these stocks that I spoke about?
So Rima, we have Airtel in our portfolio, so bias there. We have Reliance in our portfolio, so bias there as well. I think they're the two winners of the telecom mobile space game here. I think here you've got a problem in Vodafone having 200,000 crores of debt and with almost no clarity on what happens going forward. They have negative equity of 75,000 crores. So, you've got to bridge that first, because at some point, banks are going to be like, we don't want to lend any more to this company to fund. Of course, bank debt is relatively small. I think 25 or 28,000 crores of total actual debt, and remaining all is government AGR dues. The government isn't willing to convert its AGR dues into equity until the promoters show some interest in infusing more capital, and the promoters haven't said they will, or they haven't yet done so. And you've got the fact that they have another deal with ATC, which requires either clarity on the government infusion or conversion to equity, or some kind of promoter cash infusion, both of which haven't come. So you're sitting in limbo on the balance sheet. The operation seems to be okay as of now, as long as they don't want to invest too much money into 5G. I think this is a company on the edge. I would say, it benefits, of course, me to say that, because I own their competitors, but it is a concern, and it will affect downstream players like Indus Towers and some banks as well, who have some exposure to Vodafone Idea debt. But I mean, at this point, I think I'd still bet on the Airtel and the Reliance to take more of their market share away.
Okay, all right. Hi, Deepak. Deepak, I want to ask you about two big winners, which have made a lot of money for investors and highest in terms of pedigree. Bajaj Finance and Titan. It seems, when the top ranker in the class misses estimates a little bit, then the teacher is not too happy, right? But what's your sense? Both these two have given a bit of a dip. Your view on both these two, valuation-wise, there's not too much comfort, because obviously trading at upper end of multiples, and that's always been the case. Your take?
Yes, I think you've said that, Nigel, in your last statement, the upper end of the estimates on valuations in a time when interest rates are rising and thus valuation plays become less attractive. That is, I think, the real story here. In Bajaj Finance's case, one of the big reasons why I think it's made a lot of money in IPO funding. IPO funding last year, even in the December quarter, when there were those big startup IPOs, we saw 50,000 crores of IPO funding coming in from the likes of Bajaj Finance. And this time there's none of that. Of course, RBI rules have changed. You can't lend more than 1 crore to any individual person. But that entire book, which was fairly profitable for a Bajaj Finance, will no longer be available. And their loan growth has, not grown at the same pace as expected. So there will be that fear of whether those valuations can sustain. On the Titan front, I think, again, this is just a valuation correction. Estimates, of course, I mean, the problem is these companies grow, at least Titan grows at 10, 12, 13% and has such extremely high price to equity ratios that, you would want it to grow at 25% for 5 or 6 years before it can justify it. So I would say, coming down in terms of Titan valuations makes a lot of sense just as a normal correction without there being a problem at all. So in both these cases, I don't think there's a problem in the companies. There's a problem in the valuation. And yeah, we have some investments in one of them. So, it's not a huge amount, but we know that, the companies underlying are sound, but valuations, they're the vagaries of the market. And this market is not going to be happy in this high interest rate time to give very high valuations.
Okay, stay on. Need to slip into a very short break. We'll come back and discuss the way forward with Mithun Aswath of Kiva Advisors. Welcome back. 18,070 on the Nifty. We're off from the day's high, which was 18,141. We faced a little bit of a resistance around the 20-day EMA, exponential moving average, which stands at 18,170. That is seen as a bit of a resistance level. We didn't quite get there, but before that, there was a turn in the markets. But as you can see, from the low that the markets hit at 2 p.m., there has been a bit of a recovery. The focus is going to be on IT names. TCS reports numbers around 4:45, 5 p.m. The press conference is scheduled at 5:30 p.m. So let's quickly tell you the big numbers to watch. Dollar revenue growth seen up 1.6, 1.7%. Constant currency revenue growth seen up 1.5%. Margins likely to expand for the second consecutive quarter. 24.7% is the CNBC-TV18 poll, driving a 6 to 7% increase in the profitability. On a year-on-year basis, TCS's revenues could surpass Infosys for the first time after 12 quarters of an underperformance. Some key things to track in management commentary. Does the company hold on to its Q4 FY23 exit margin guidance of 25%? Will the deal wins continue in that band of $7 to $9 billion, not just in the current quarter, but perhaps over the next couple of quarters? The focus on furloughs will be high. The UK and Europe exposure for TCS is higher than peers at 30%, where there is more concern about growth slowing down. Calendar year 23 budget closures, the rate of spending increase or decrease, and the priorities. And CLSA finally also sees the potential for a buyback in Q1 FY23. The previous buyback only closed in March of last year, so you need a one-year cool-off period. But does perhaps the management hint about a potential buyback in Q1 FY24? That's the valuation picture at a bit of a crossroad. It's not at the peak levels of 31, 32 times that TCS was trading at in the post-COVID digital transformation acceleration. But if I compare it to the pre-COVID three-year average valuation of 21 times, TCS's current valuations are still at a bit of a premium. Deepak, the jury's still out whether it's time to get constructive on IT names. Your thoughts on the sector and anything in particular that you want to watch and hear from TCS?
So Rima, again, we own this stock. So, there's a bit of bias here, but we've reduced our position in the recent quarters. I think this quarter is going to be, we don't expect too much. In fact, anything good would be a surprise. Even a 1.5%. I mean, I think it will be sitting there on a quarter-on-quarter rise in revenues. And we expect margins to start inching back upwards. We're seeing a lower attrition. We're seeing some benefit of the rupee rate also starting to come to them. In rupee terms, at least it will start looking good. But I think the main thing will be the commentary. We are looking at budgets starting in the first quarter of next year. The budgets don't look attractive. I mean, this year. So right now, the budgets don't look attractive enough, and people are being very hesitant to spend. At least from what I'm hearing, and our internal, whatever we're getting from the street is that people are likely to make more stronger decisions only in Q3 and Q4 of this year calendar. So most of the wins which will happen is likely to be shifted towards the middle or late part of this year. We thought it'll start coming in March, April, probably later. But TCS is going to be one of the guys that stand out because they are a juggernaut in this kind of, in this kind of a market. In the past, when you've seen almost all the other IT companies falter, they have kind of moved ahead very strongly, both from deal wins and in terms of margin. So, I think from March, after the March and June quarters, I expect big surprises from them on the upside. This quarter, I don't think, we should expect too much. In fact, I think the commentary will give us more color into how much longer the recessionary feeling in the US will last, which is what will bring TCS around.
Okay, well, yes, as you said, right? I mean, the key phrase is to just keep your expectations low this time around, considering what we saw last year on the IT space. Take that point. Devyani International is also in focus. Citi has initiated coverage on the stock. Mangalam is here to give us details on that. Mangalam, what are they saying? Things are getting tastier there?
Things are getting tastier there, and the report was released this afternoon itself, perfect for lunchtime actually. They've initiated coverage with a buy rating and a target price of 232 rupees, which is a little over 35% in terms of an upside from current levels. The reason they like the stock is because they believe that the company's strategic decision to exit loss-making formats and improve their average daily sales is something that will drive growth going forward. They actually expect a 30% revenue compounding over the next 3 years. And while that happens, their profit before tax margins are likely to improve by about 550 basis points as well. What does this mean for their cumulative free cash flow generation over the next 3 years? It could be close to around 450 odd crores. And we're talking about a 400 crore profitability as expected by Citi by FY25 itself. How much of that is in the price? I mean, Citi says that they prefer Devyani to Jubilant Foods, despite Devyani trading at 44 times as against Jubilant Foodworks trading at 39 times. They believe this 15% premium that Devyani trades at is primarily justified due to higher revenue growth and ROE expectations. So let's see what happens going forward.
Okay, let's see what happens going forward. Let's do one thing. Let's take a quick break on that note. All right. In fact, sorry, Deepak Shenoy is still with us. So let's get a comment from him. Deepak, what looks better to you? Or rather, what do you prefer on and off the stock markets between Devyani and Jubilant Foodworks?
Actually, none of them, to be honest. We haven't analyzed them too much. They traded such expensive valuations that always, puts me a little bit at edge here. So, but honestly, I think Devyani is a very interesting company here. It's comparatively lower valued. It's of course the brands they have are also not as popular. But given where we are, our propensity to perhaps eat the more unhealthy stuff, and this is really unhealthy stuff at its best. Maybe I should take a deeper look. I'm sorry, I don't have a more meaningful comment at this point, but I haven't analyzed the books too much recently.
Okay, all right, Deepak, thanks a lot for that. Well, we'll let you go at that, but look forward to chatting up with you in the coming weeks as well. Always appreciate you joining in with your thoughts. By the way, on the index itself, some of those dips are getting bought into. Just pull up the intraday chart of a few stocks. SBI Life. Remember the insurance space, after a while, it's coming out of that bleak period in terms of stock prices. We're suddenly seeing some of these insurance companies do well, and SBI Life has spiked to the high point of the day. So keep an eye out on that. Power Grid, earlier today, we saw a large trade that took place. I'll be interested to see who are the buyers, but post that, we have seen a big uptick in the stock. It was at around 203, 204 odd. Now it's moving to around 210 rupees. So that's another one in there. And suddenly you have the Nifty Bank that's showing some traction. Axis Bank is spiking up. Big boy HDFC as well has recovered a little bit from the low point of the day. So good signs. If the Nifty can end closer to around that 18,100 odd mark. For the time being, though, let's get chatting with Mithun Ashwath, Managing Partner at Kiva Advisors, who joins us. Hi, Mithun. Wishing you a good 2023. Well, in terms of the markets and positioning, I think today is going to be a big day. I guess you'll be tracking TCS's numbers very closely. I think in sometime in September, you said that you all were pretty bullish on the counter, on the index itself. That's the IT stocks. And TCS and Persistent, if I remember correctly, were two stocks that you like. What's your stance on the IT pack now?
Yeah, good afternoon, Nigel, and Happy New Year to you and your viewers as well. I think on the IT space, if you see, since we got that correction in September, October, we've seen a reasonably good rebound in the mid-cap IT companies because valuations had come to the lower end of the band. Similarly, even in TCS, it had come about 10-12% lower from the current levels. So I think from here, obviously one needs to see how the US interest rate cycle moves. We do think interest rates maybe in the US have peaked out, and we could gradually start seeing inflation in the US also start to come down. That itself will give some impetus to the tech sector in the US, and that could provide a rub-off effect to Indian companies. In terms of the actual revenue growth and profit growth, revenues may actually, the revenue acceleration may come down. So you will not see revenues grow like how they grew in the last couple of years. But that could get offset by profits growing maybe slightly better because margins could get expanded over the next couple of quarters. That is the sense that we are getting.
I remember last time you had said that you like Explio Solutions in the small cap IT space. Do you still continue to hold that? Have you added on any other small cap, mid cap IT names?
No, Rima. This Explio is something that we've been holding for quite some time. It has actually got a corporate restructuring which is happening. They are merging their unlisted businesses into the listed company, which will make it a much larger entity. Overall revenues could touch over 900 crores, and they are looking at expanding in terms of headcount to about 5,000 employees from the consolidated about 3,500 over the next 2-3 years. So we actually see that as a potential opportunity, where your employee base, which is growing from 3.5 to about 10,000 over the next 3 to 4 years.
Okay. Mithun, hi, good afternoon. You also like the hospitality sector, and you do say that there's a good risk reward there for investors. What are the names here that you like?
Yeah, good afternoon, Sonia. I think, the hospitality space is the last one to have, moved out from in terms of the COVID situation. Now, even with China opening up in terms of travel, if you see pre-COVID, Chinese used to contribute 25% to overall the tourism industry globally. So that will give a massive fillip, I think. We will see a lot more inbound and outbound traffic from India over the next 2 to 3 quarters. So we do like, as I mentioned earlier, travel services companies like Thomas Cook. And we also have been bullish on a software company which has airlines as clients. It's a company called Acelia.
Okay, all right. A couple of other names that we have spoken about in the past from the consumption pack. That's the FMCG stocks, to name a few. I think Tata Consumer as well as Marico, both of them, I think you pretty much had some preference towards them. Any other names, and do you continue to prefer both these two?
Yeah, I think these two over the medium to long run have a good runway, especially because they are focused on newer categories in terms of healthier categories, be it on the Marico side with the Saffola brands that they're extending into different categories, as well as on Tata Consumer they have bought into Soulful, where they are looking to enter against several more categories under the same brand. So I think these are two companies which are focused on D2C as well as growing their existing business. So obviously their existing businesses are not going to grow at a very rapid pace. They will provide the cash flows, but the new businesses that they're investing in will provide the growth. So I think there are excellent ways to play this opportunity.
Any stocks which you recently exited because the risk reward isn't favorable anymore?
Nothing of late, Rima. I think I mentioned last time as well, I think only Raymond was one thing that we had exited in the recent past, since it had rallied quite substantially.
You exited Raymond recently, is it?
That's right.
Okay, all right. A couple of more spaces that you like. You've said that textiles may see an improvement in margins from the fourth quarter. Construction activity remains quite strong. You like cement, you like real estate, ancillaries. Can you take us through some names that are good buys for the long term?
Yeah, I think textiles is something that we are just monitoring because we think the third quarter again will be painful because they would have had high cost inventories of cotton. But from the fourth quarter, we actually do see, the cotton prices have come off with the new cotton crop. If you see the current prices of cotton, they're way off what they were last quarter. So we do think, also the inventory glut which was there in the US markets and the European markets may also, level off. So we can see a new cycle for a lot of these exporters. And a lot of these stocks are come off maybe 50-60% from their highs. So that is something that we are closely monitoring. Apart from that, you mentioned on the construction and as well as on the building material side, we're quite confident in spaces there as well. If you see recently, the gas prices have come down, and that could aid areas like ceramics and tiles, which have plants in those regions where gas prices have actually been reduced. So that could aid margins. And we do think growth in these spaces will continue to be in the mid-double digits.
Okay. You want to name a couple of companies from the ceramic space, that's the building products space, and also from the textile space? Couple of stocks, couple of names that maybe you all are invested in or you all are currently in the process of studying that?
Yeah. So, on the ceramics and the sanitary ware side, we've spoken about Cera Sanitaryware is something that we, been holding and we continue to be positive on. We don't hold, but I can mention Kajaria Ceramics again will benefit from this gas price coming down. In terms of on the textile space, we've been monitoring and looking at, the home textiles space as well, which has corrected significantly. And we are also evaluating a company called Gokuldas Exports, which is on the garment export side.
Mithun, we'll leave it at that. Thank you very much for joining in. Look at the way Kajaria Ceramics has spiked. The stock has suddenly surged close to about 2%. By the way, for the markets, the Nifty is once again scaled to levels of 18,100. We had dropped down to levels of 18,050 thereabout. But again, there has been an up move in the markets. A couple of contributors include UPL, so that's up close to about 2.5%. Reliance Industries has been a steady gainer today. Reliance Industries is up close to about 2.5%. HCL Tech has seen buying through the course of the trading session. So some of these stocks, Axis Bank, Tata Motors, these have seen minus spurts in the last 10 minutes. The Nifty is now back above 18,100. Get into a break. On the other side, as always, we'll get you a check on what dealing rooms are saying in our segment, D-Street Chatter. We'll also tell you what you can buy today to sell tomorrow. Calls from our technical experts.
Welcome back. We're having a pretty good day after a while, actually, at 3 p.m. The bulls will feel they are in control, but it's a good time to get in. Nimesh, maybe he has a better sense in terms of how the flows are panning out. Well, Nimesh, green on the screen finally. The long-awaited relief rally finally comes about, 18,100 odd. What's the flow picture like?
Nigel, the good part is that we are back to day's high. There was a bit of intraday profit booking, but again, we are back to the day's high. And I guess there is a bit of buying as well. So the sense is there's going to be a small ETF basket buying at a leading FI yesterday. So that will add up to the FI numbers for sure, is what I understand. I guess the good part is there is commitment from larger sectors. So IT stands out today. Good move in those stocks. The entire basket looked oversold last week, and then you're seeing a bit of a relief rally here. So I guess the TCS earnings today will be very important. The overall feedback is going to be a mixed set of numbers from TCS. So that number will be very crucial, not only for the IT stocks, but for the index as well. So because IT is a good weight as well. So that's going to be important for the Nifty to sustain from here on. The other two sectors which is doing good today is the insurance space on the back of strong monthly data, and the metal names are doing some good on the back of China opening up, and the fact that there is a bit of cool off in the dollar index as well. So there's a bit of traction buying in those metal names as well, is what I understand. Having said that, we are still in that range between 17,800 on the downside and 18,300 on the upside. We need to break on the either side for a decisive move from here on. So that's something, and I guess earnings can be a big trigger for that move, either on the downside or on the upside. So that's something to track. But I guess today's move is from oversold levels. We've bounced back, and there is a bit of support through some ETF buying at a leading FI desk.
Okay, so we'll watch out for the institutional number. Last few days, the FIs, they seem like they broke up with us, but let's see whether or not there is some money that comes back. Individual stocks, what are you picking up?
So in terms of individual names, the first stock on my list today is Kotak Mahindra Bank. 10 days back, I had alerted about a large block deal. Now the feedback is maybe the block is not happening. So a leading FI investor was likely to sell a large block, as I understand, has actually withdrawn the block. So maybe the supply overhang from Kotak Mahindra Bank will be out, at least in the near term. That's the overall feedback from the dealing. So that's the first one. The second stock on my list today is Laurus Labs. There was a large block, around 10 lakh shares equity changing hands, and I believe it was a clean out trade from a leading seller. So that's why you're seeing a bit of a relief rally in Laurus Labs today. So that's the second one. The third stock is Power Grid. There was intraday there was a large block, almost 2.4 crore shares changing hands, and there I believe a leading long only fund was a seller in Power Grid today, and some domestic funds would have bought. Remember, it's a good dividend yield, and hence there is a bit of traction buying as well in Power Grid. And the last stock is Reddington. After a long time, I'm hearing a bit of buying interest back in that particular stock, up to 1% in today's trade. But I believe small buying traction is back in Reddington at leading FI desk.
Thanks a lot for that, Nimesh. We'll keep our eye out on those stocks. But Jet Airways public shareholders are staring at a wipeout in their share value after their stake in the company declines to 0.21%, according to the approved resolution plan document assessed by CNBC-TV18. The Jalan Kalrock Consortium has proposed to reconstitute the public shareholding from 25% to 0.21%, resulting in an almost complete wipe-off of the current market value of holdings of public shareholders. Madiha joins in now to explain what this essentially means. Madiha, can you break it down for our viewers? What happens to public shareholding once this takeover happens?
Yes, so you're right. It's going to be a wipeout of market value for public shareholders. At least that's what I gathered after going through the extensive and exhaustive resolution plan document. So here's what the Jalan Calroc Consortium has proposed as shareholding pattern after it takes over the airline. Shares adding to 89.7% of equity will be issued to the new promoters. Equity of 9.5% will be issued to assenting financial creditors after conversion of their debt. Remember, lenders have taken a whopping 95% haircut in this resolution plan, and the share in equity is what they had settled at in return of the haircut. There's something for employees and workmen as well. They will get 0.5% equity after the takeover. But here's what happens to public shareholders. Currently, public shareholders own about 23% in the over 800 crore rupees market cap company. After the reconstitution exercise, their holding will drop to a mere 0.21%, erasing almost entirely the value of their shares. The plan also proposes that the resolution applicant will restore public shareholding to 10% within 18 months and to 25% within 3 years.
Okay, thank you very much for that, Madiha. Let's take stock of the market technicals now. Mitesh Thakkar is back with us, and he's going to tell us what you can buy today to sell tomorrow for a reverse trade. Mitesh, what do you have for us?
Yeah, I have in fact a cash stock as not as a BTST, but even a trading call. CG Power, I think, is having a massive price volume breakout, and one cannot be ignoring that one. So here, I recommend buying with a stop below 281 and a target of around 310 on the upside can be looked at. And M&M is more of a BTST kind of a call. Keep a stop below 1300 for targets of 1325.
Okay, thank you very much for that. Mayuresh Joshi, Head of Equity Research at William O'Neill, is now with us on the show. Mayuresh, what have you made of the fall that we've seen in Titan? Numbers look pretty good. They're continuing to grow at double digit despite a very high base. There is no outperformance to that extent, but still, the numbers are pretty healthy, but the stock has slipped 2%. What's the street concerned about apart from valuation?
Afternoon, Rima. No, I think as you rightly pointed out, I think the numbers that came in were in terms of expectations that were laid out by the street at the higher end. And obviously, like in the case of Bajaj Finance, though we've seen a reasonable AUM growth, for Titan's case, the resilience has been pretty strong. Specifically in its jewelry business, where on a year-on-year basis, you've seen 11% growth. On a consolidated basis, 12% growth. And even the watches segment has performed exceedingly well. So I think the expectations are more from both these stories at this point of time. And therefore, when you compare the kind of moves that the stock had given in the COVID era and what is expected specifically in the post-COVID era and the festive season that has just gone by in the previous quarter, much more was probably expected in terms of top-line stroke volume growth as well. The second element in terms of the structure of the company, I think great companies, no two ways about it. But the large element in terms of being still expensive at this point of time, where the street probably expects them to continue the growth that they have probably delivered on a quarter-on-quarter and a year-on-year basis at the same pace, that might just take the sheen off in terms of a slight bit of derating that can probably come through on the stocks. So I think the entire perspective is more price correction that is probably happening on the stocks at this point of time. The EPS rating specifically for a stock like Bajaj holds out. For Titan, I think the gold jewelry business itself, the expectations of this very strong marriage season expected to take place is something which will hold true in terms of both volume growth and realization growth as well. But I think it's just the derating in terms of valuations and price correction that is happening. It's fear, Rima, Kalyan apparently is hitting 52-week size. Based on just this logic, that valuations are seemingly more attractive at the broader end of the spectrum in the jewelry space.
Okay, all right, Mayuresh, just stay with us. 18,100 now, we're trading above those levels, which is good news from a bullish perspective. If we can end closer to the high point of the day, the bulls will take that with both hands. Just take a look at a couple of stocks. SBI has moved to the high point of the day from the banking names. UPL as well, it's a lightweight on the index, but that as well has moved up pretty well. But the reason that we are at the high point of the day yet again is because of a couple of those big winners. One is big boy Reliance Industries. Just pull up the intraday chart out there. That's moved to the high point of the day. And HUL is the other darling in there from the bullish perspective. That one as well has moved up. I'm highlighting both these two because weightages are rather high on both these two names. Intraday chart tells you a better picture. Well, Mayuresh, we're just highlighting some of those big names. But I recall, you all had come out with a note on the paper sector. And in 2022, well, the paper stocks did very, very well. What's your view right now? I'm looking at a couple of names. One of the highest traded volumes that I've seen in the recent past is on Orient Paper, which was one of the biggest underperformers in 2022. Your view on the sector, and if any take on Orient Paper in particular?
Afternoon, Nigel. No, largely, if you probably look at the construct of the paper industry itself, expected to grow at a 4-5% pace over the next couple of years. The unlock trade, which started 3 to 4 quarters before, has largely continued seemingly well, both in terms of volume and price growth. They have taken price hikes significantly because input cost pressure obviously had played out post the unlock trade as well. With businesses opening up, schools opening up, the expectations of this continuing augurs well for the sector as a whole. Around 23-24 in terms of the industry size in MMT terms, largely the large construct is packaging stroke, packaging paper as well and packaging board, which constitutes almost 60-odd%, followed by printing, writing and colored paper as well. Now the large integrated companies, Nigel, will seemingly do well because in a scenario where input costs are coming off at this point of time, they are in better control, both in terms of raw material sourcing that they have because of their integrated capacities. At the same time, with the hikes that they've taken, even if they probably start cutting down prices a couple of quarters down the line, the margin improvement will still be stark. The third element obviously is going to help them is obviously, I think, the kind of expansions that are happening. I think very few expansions happening within this space itself, both brownfield and greenfield. And therefore, I think with the kind of e-commerce activity that we are probably seeing, packaging stroke packaging board is expected to grow significantly better in the coming few quarters as well. So I think integrated papers like the JK, West Coast, with capacities that they have at this point of time, and a better rating in terms of the overall business sense as well, and the model that they're probably running through, can relatively seemingly do well. All paper companies, I just posted brilliant set of numbers in the previous quarter. So I think integrated companies.
Okay. The other set of stocks that I wanted to ask you about was the tire companies, Mayuresh, because, a lot of them have a dual positive. One, of course, crude and rubber prices have fallen to new lows. Then you have very good improvement in demand, especially in the SUV space. Any of these tire companies that you like from a long-term standpoint?
So, afternoon, Sonia. I think interesting positioning for the tire sector as well. Likewise, for the paper sector, input costs have gone down significantly. Whether you talk about natural rubber, synthetic rubber, natural nylon tire cord, and crude derivatives as well. So the kind of input cost inflation that they faced in the first couple of quarters in the first half should seemingly start coming off, and that should reflect very, very positively in terms of margins. The second element is also the product mix that they've got. So if in the case of Apollo tires as an example, the replacement market is pretty large. In the case of JK tires as an example, the CV portfolio is almost 55%, the PV portfolio 21-odd%. I was just hearing out Nigel's piece at 2 o'clock when he was discussing Jamna as an ancillary in terms of a proxy play in terms of how CVs are expected to do well. Tires being a proxy for the CV space as well can continue doing well. The third element also, Sonia, is the anti-dumping duty, which has got extended till December 22. It might come out for review, and if probably that gets extended, the replacement market realizations, which are obviously far, far better, should hold out. And with the kind of OEM sales that you're probably looking at, the CV cycle holding strong, the PV cycle in very good stead at this point of time, volume growth should be reasonably strong as well. The sufficient amount of export opportunities that are also available because of higher costs for running these units in Europe, as an example, would also give an opportunity for these players. But more or less, domestic teams like a JK, CAT should continue doing well.
Okay, well, JK CAT should continue to do well. We will just take a quick commercial break. More market talk lined up on the other side, so don't go anywhere.
solid session for the bulls. The bulls will like this. We're comfortably going to be closing around that 18,100 odd mark. We just got a few minutes. And for majority of the last 20 minutes, we have traded above that 18,100. And as we know, the averaging is taken into consideration. Well, Mayuresh, before we let you go, a couple of quick questions on the metals pack. If China is going to turn around and the reopening trade is actually going to come to the forefront, which it seems the globe is likely to play, then metals could do well. What's your sense? Play the ferrous theme or non-ferrous theme? Should you play the theme in the first place?
Interesting question, Nigel, and it's an important part for China because that's the biggest elephant that controls prices, both in terms of demand, supply, and LME. Having said that, I think the price hikes that have been taken, both HRC and CRC in the Indian context, is more or less gestated by a lot of companies. In the non-ferrous space, Hindalco trades about key pivot levels as we track it at the O'Neill system. And even if aluminium prices are coming off, I think the overall usage that aluminium has, both in terms of batteries, both in terms for the beverage market, can market as well through Novelis, leverage coming off, and expectations of prices firming up because inventory levels are at abysmal levels, that probably augurs well. But a few of these ancillary themes, Nigel, a few of these pellet makers, to the likes of Sarda Energy as an example, I think the expectations in terms of the business dynamics that they're operating out of, the ex-pellet prices at Chhattisgarh at this point of time inching higher, expectations of EBITDA also moving higher at this point of time, with exports expected to improve significantly. The entire China unlock probably happens, significant deleveraging also happening on their balance sheet, and therefore I think a lot of operating leverage playing out as well. So on the watch list at this point of time, as I said, Hindalco trading above pivot levels, something like Sarda can put on the watch list.
Okay, Mayuresh, thanks so much for joining and giving us a view on a whole host of stocks. Wishing you a good Monday evening and a good week ahead as well, Mayuresh. Thanks so much for that. Well, it's been a good trading session. Let's wind things down on this Monday. Well, barring I think Titan as well as Bajaj Finserv, most of the stocks in the Nifty pack itself did well. And the Nifty goes home with gains of a rocking 235 points odd. The Nifty Bank, yes, it underperformed, but towards the end of trade, it did try to do a bit of catch-up. The other sector that really did well today, solid going, was the IT pack. The IT stocks on the whole were higher, and Reliance Industries as well ended with a gain of more than 2%. That's what helped the Nifty, try to do well, despite the largest component not doing very well. Mahindra and Mahindra. Sonia spoke to the management out there. They're optimistic about the EV plans, and that stock ended high with a gain of close to around 3.5%. TCS goes strong into its numbers. SBI Life, like most life insurance companies, well, they have come back in style. And today as well, that was in the top 3 gainers. So good going. The breadth of the market, a little bit disappointing because the mid and the small cap indices, well, they were relative underperformers, but there were plenty of movers out there. Sonia, Rima?
Oh, absolutely. Plenty of movers in the broader markets as well. I mean, the mid-cap index was up almost about 1% odd. Didn't do as well as the frontliners, but very good nevertheless. CG Power was the big mover in the broader markets, up almost about 7% odd. Big volumes there. KEC International, Godfrey Phillips, L&T Finance has also been moving up, and a lot of mid-cap IT names surged today, perhaps ahead of numbers. The estimates, are looking on the lower side. Of course, expectations are low, but the stocks have fallen quite a bit as well. So maybe a pullback from the lows. Persistent Systems, KPIT Tech, all moving with some strength today. You had Adani Group stocks that were looking good. Adani Transmission was in the green. Something like a Birla Soft was up about 3% odd. PNB Housing Finance, Adani Wilmar, IndusInd Bank, Adani Green, a couple of other stocks that ended in the green today. On the downside, you had Vodafone Idea that was down about 5%. Sugar stocks came in for a bit of profit taking. Sri Renuka down 2.5%. South Indian Bank, IDBI Bank, JP Power, BHEL, IOB were all under a bit of pressure today. And some of these penny stocks like JP Associates also down almost about 4% odd. But otherwise, really good day of trade today. Good start to the week. And after, it's been really volatile, right? The last week we ended Friday with a steep cut. We managed to recover more than, a double of that actually in trade today. But it's just been all over the place for the market.
Absolutely. So just some more mid-cap winners to wrap up trade. L&T Finance Holding by the end of it was up 5.5%. SAIL and NALCO saw buying. Stocks ending with gains of close to about 2% odd. Bandhan Bank, where the business update was strong, the stock hit, crossed its 50-day moving average, ending with a gain of close to about 1.5%. Zomato was higher in trade. Paytm has been seeing buying. for the last 7 consecutive sessions, and a couple of the other stocks which stand out on the volume charts also include the likes of Aircon. Aircon rallied 4.5% on very large volumes. By the end of it, the Nifty couldn't quite close above that 18,100 mark, but still, it's going to go home as a very strong session, 230 points higher on the Nifty, with the sensex gaining close to about 700 points. With that, we're going to take your leave from the entire team of Closing Bell. Thank you for watching. Don't go anywhere. A very special conversation with the DIPAM Secretary, Tuhin Kanta Pandey, comes in next.